Okay, let me ask you something. Did you know there is up to $1,168 in direct financial relief literally just waiting to be claimed by eligible residents? It's true. This money is specifically there to help ease the heavy burden of rent or property taxes. So, if that number caught your attention, you are in exactly the right place.
Welcome to This Explainer. Today, I'm going to be your guide as we completely demystify a seriously powerful state tax benefit, the Wisconsin Homestead Credit. Whether you're a renter feeling the squeeze of those monthly payments or a homeowner looking for a much-needed break on property taxes, this explainer is designed to give you real, practical value. We're going to walk through the source material step by step, so by the end, you can confidently secure the relief you absolutely deserve.
All right, let's dive right into this. Here is our 6-step roadmap for today. Number 1. What is the homestead credit? 2. Who can claim it? 3. Gathering your documents. 4. The application process. 5. Tips and common mistakes. And finally, 6. Resources and next steps.
Section 1. What is homestead credit? Let's understand this financial relief.
First things first, we've got to break a huge misconception about the word homestead. When you hear that word, you probably picture a massive, sprawling farmhouse, right? Well, actually, as the source material makes super clear, a homestead can be a room, an apartment, a mobile home, a regular house, or even a nursing home room. The only catch? It just has to be subject to Wisconsin property taxes. This program is specifically designed to soften the impact of those taxes and rent on individuals with lower incomes. So it really doesn't matter if you rent or own, this relief could be for you.
Moving on to Section 2. Who can claim it? Here is the eligibility checklist.
Okay, let's look at the primary rules of the game to see if you qualify. You must be 18 or older by December 31st of the tax year, and you have to have been a legal Wisconsin resident for the entire year. Also, you cannot be claimed as a dependent on someone else's federal tax return, well, unless you happen to be 62 or older. But listen, the absolutely strictest requirement you need to pay attention to is the income limit, your total household income, and yes, that includes both taxable and non-taxable sources, must be strictly under $24,680.
Now, if you pass those base requirements, you are almost there. You just need to meet one of these next 3 conditions to get over the final eligibility hurdle. Either you or your spouse must have earned income during the year, or you or your spouse must be disabled, or you or your spouse must be age 62 or older by the end of the tax year. That's it. Just checking one of those 3 boxes unlocks the door.
However, I do have to point out a few hidden traps, so you know right away if conflicting benefits will disqualify you. If you are already claiming the Farmland Preservation Credit or the Veterans and Surviving Spouses Property Tax Credit on the exact same year's taxes, you can't double dip. No way. Also, if you received Wisconsin Works, W-2 payments of any amount or county relief payments of $400 or more for all 12 months of the year, unfortunately that disqualifies you from the homestead credit.
Let's move into Section 3. Gathering your documents. Time for paperwork prep.
So when it's time to verify your housing costs, things split into 2 main paths based on your housing type. If you're a homeowner, it's pretty simple. You just need a copy of your property tax bill for the year. If you're a renter, you are going to need a completed rent certificate. And here is a super vital detail you cannot forget. That rent certificate absolutely must be filled out and signed by your landlord.
And this brilliantly illustrates another vital piece of the paperwork puzzle. Alongside standard documents like your W-2s, you might need Form WRA. What's that? Well, when you file your tax return electronically, you still have to prove your housing costs. Form WRA is literally the required attachments form. You'll print this guy out and mail it along with your W-2s, rent certificates, or property tax bills straight to the Department of Revenue within 48 hours of getting your e-file acknowledgement.
Section 4, the application process. Here is your map to success.
Honestly, filing your claim is pretty straightforward when we break the bureaucracy down into these 4 digestible steps. Step 1, choose between filing Schedule H or Schedule HEZ. The easy form is essentially for folks with simpler income sources. Step 2, just fill out the tax forms accurately. Step 3, attach your proof, like those property tax bills or rent certificates we just talked about. And finally, Step 4, submit the whole thing securely online or by mail.
Now, for the absolute fastest processing, the state highly recommends filing electronically. You can use Wisconsin's free online My Tax Account portal, which is super secure. Now, if you're a paper person, you'll be mailing your full packet to P.O. Box 34 in Madison, Wisconsin. But, quick pro tip, filing this claim separately from your state income tax return can sometimes cause frustrating refund delays, so it's definitely best to submit them together if you have an income tax filing requirement.
Section 5.
tips, and common mistakes. Let's make sure we are avoiding those hidden traps.
Now, what's really interesting about this rule is just how strict it is. This is an explicit warning straight from the rent certificate instructions. Never, ever use whiteout, erasures, or any alterations on lines 1 through 13 or on the signature line. If you make a mistake, or even if your landlord makes a mistake, do not cross it out. Literally, any alteration will completely void the rent certificate. You simply have to throw it away and start over with a fresh one.
And here is another really common trip-up for renters. If you have roommates, meaning there are 2 or more adult occupants living in the rental unit, and you don't pay an equal share of the rent, you can't just guess your portion. You are absolutely required to accurately calculate your specific portion using what's called the Shared Living Expenses Schedule. This just ensures you only claim the exact percentage of the shared living expenses that you actually paid.
Okay, for those of you choosing to file paper claims, listen up. The state uses electronic scanners to process your forms. To make sure your application sails smoothly through those scanners, follow these quick, actionable tips. First, use black ink only. Pencils and markers just do not scan well. Second, don't cross out entries. Like we said before, if you mess up, just start a new form. Third, do not draw vertical lines in blank boxes, because the scanner actually reads those lines as the number 1. And finally, never submit photocopied forms. They can cause completely unreadable entries. Section 6. Resources and next steps. Let's wrap up with some final thoughts.
I really want to reassure you that you don't have to do this all by yourself. Free, hands-on tax help is widely available out there, particularly for seniors, individuals with disabilities, and low to moderate income residents. You can look for IRS-sponsored beta sites or AARP-sponsored TC sites right in your local area. You can literally just dial 211 on your phone to be connected with local free tax prep locations. And of course, the Wisconsin Department of Revenue's Customer Service Bureau is always available by phone to answer your specific questions.
And here is a fantastic piece of news that should absolutely remove any immediate panic about missing the standard tax day. The Homestead Credit actually has an extremely generous filing window. While the standard tax deadline is April 15th following the tax year, you actually have up to 4 full years to file a late claim. To put that into perspective, for the 2025 tax year, your absolute final deadline to claim this relief is April 15th, 2030. How great is that?
So, I'm going to leave you with this final empowering thought. If your household makes under that $24,680 mark, you owe it to yourself to see if you qualify for that $1,168 return. I mean, what could that extra money do for your peace of mind this year? Now, just a quick professional disclaimer before we go. This explainer provides general guidance based on state source material. Because everyone's financial situation is a little bit unique, please make sure to consult a tax professional for personalized advice. Thanks so much for joining me today, and happy filing.